Alright, what's up everyone? And today we'll be talking about trading crypto. Which kind of cryptos are you going to be trading, meaning small cap or large cap? I think everyone will start to notice that the overall market volatility has actually picked up quite a lot over the past few weeks. In the past, when we saw Bitcoin actually tank and just drop dramatically, you will also see a large part of the volume actually exit the market, and no one was actually coming out to do any kind of trading in crypto. But right now it seems that the overall crypto market has started to wake up, and we are starting to take note that cryptocurrencies are moving from anywhere from 15% to even 50%. So we need to kind of address this very quickly, so that if you are someone who is trading for the very first time, or you're not very familiar with the crypto space, it is best that we address this in this episode. So let's start with the crypto market first, or at least helping people determine what does it mean by small cap and large cap. Okay, so let's go to the screen. Okay, so right now, to kind of determine whether you are trading a large cap or a small cap cryptocurrency, right? You are looking at the overall market cap here. So you can just easily go to CoinMarketCap, and you can determine right now which one is the largest. So it's quite straightforward, where you see, oh, okay, the market cap of Bitcoin is at 68.5 billion, and then everything else seems to not even reach like say for example, the next thing you see Ethereum with only 14 billion, and then everything else will trickle down smaller and smaller and smaller. So right now you're probably thinking, so where do I start? What kind of cryptocurrency should I be looking at, or what kind of cryptocurrency should I be trading? So I think the most important thing is you have to address a few things. Are you someone who is purely looking for high volume, high price action? Sure. I think every trader would want to have a certain level of volatility, and at the same time making sure there's enough volume to support the amount of cryptocurrencies that you are buying. Now, large cap, the good thing is that there's enough supply. All right. Everything about trading, anything that you buy, you must be able to sell. If you are able to buy but you cannot sell, that means there's not enough demand on either side. That means, for example, if you're someone who is a buyer and you want to buy a certain cryptocurrency, but however there's not enough people selling, okay, same thing. Eventually when you want to buy, your intention is to make a profit. And if you cannot sell because there's not enough sellers on the sell side, that means you're going to be stuck back holding, as they say, back holding this particular cryptocurrency. So once you have kind of determined that, okay, by understanding the market cap and obviously the day-to-day 24-hour volume, that's when you can start searching for the various types of cryptocurrencies. So exchanges are very intuitive, right? They will allow you to see all these pieces of data. So let us go to an exchange. For example, right now I'm just using the Huobi exchange, and when you look at the Huobi exchange, right, you're going to see quite a number of things. One, you are able to use, you're obviously able to identify the type of cryptocurrency that you are trading, and you are now looking at the order books, which I'm pointing right here, and the amount of market trades that have been executed in the past whatever time frame. Okay, so let's say for example right now you are seeing all these numbers flash up and down. What are all these numbers about? Well, basically it just means that there's activities happening on the buy side, which is the green, and the sell side, right? So all these numbers that you're seeing here are the numbers of BTC that's being sold and at what price, right, at the various price points. And then of course on the green side is that you're seeing all the amount of Bitcoins that are being placed as an order and the size, right, as you can see. So you're seeing, like, for example, at 3852.09 you have this person that wants to buy 0.0029. okay, then if there's demand, there are people wanting to buy at this particular price, it will shift accordingly. Okay, so you just have to identify that. Now, when you are trading large cap, your orders are going to be filled pretty easily. So safe to say that anywhere from $1,000 up to $10,000, it's pretty possible. But if you look at it, it depends on the particular day. So let's say, for example, right now, it is, what's the time now? It is almost 6 p.m. in Singapore. So since it's 6 p.m. in Singapore, you notice that the volume isn't that fantastic. You're looking at the fact that, okay, let's say this is 0.57 BTC, which works out to about $1,900, for example, or $1,800. That's kind of like the most that you're seeing. Then you have other amounts that are really relatively small, not that fantastic, that are happening right now. But when the US market opens, you will notice that there will be a whole flow and definitely more activity where people are buying up more, and you'll see the whole orders and the number of orders coming in it will look more significant. So that's where usually most of the trading activity happens. So you will know roughly where is the market activity. Another time slot that we kind of notice is when Asian markets open. That's around 8 o'clock, 9 o'clock. That's when because Korea is actually 1 hour, I think 1 hour ahead or 1 hour behind. So 1 hour ahead, sorry. They're 1 hour ahead. So we notice that there's quite a bit of activity in the morning in Singapore time. Then right now, it doesn't seem to have much activity. So as you can see, the orders are very small, okay, 2.74, nothing much. But if you look at the 24-hour volume, it looks pretty healthy at 38,271 BTC, okay? But let's go to the small caps. So small cap cryptocurrencies, on the other hand, let's look for the popular Tether. Okay, so far, if you look at the 24-hour volume for Tether, let's do a calculation for you. Okay, I just want to let you take note, because Tether right now it's worth 13 cents. Okay, so let's say it's worth 13 cents. The overall 24-hour volume is 13,268,000. Okay, not that high. Okay, which is about 1.835 million compared to BTC, which has 38,000. So 38,269 BTC. That works out to 3,800 is 145 million. You see the difference here? So one has a total 24-hour volume of 145 million as compared to a small cap crypto that is only having about 1.8 million in terms of 24-hour volume. So right now, if you are someone who is trading, that means you're someone who is trading volume, right? You're trading volume. You're looking at large cap. For example, if you're someone who wants to buy $10,000 and above, you would be better off buying you would be better off buying looking at the larger cap. But if you are someone who is, kind of trading the small cap stocks, right? Or at least, sorry, the small cap crypto, right? This is something where you are going to focus on, which actually has a lot of high volatility. But let me share the difference. Right now, if you buy a small cap stock, a small cap crypto, right? A small cap crypto is definitely going to be a little bit more on the high risk side, because they have yet to prove themselves in the open market. Or at least they've been trading, they've been around for a while, but you never know whether this particular crypto is going to sustain itself, okay? So this is something that is a good reminder for a lot of people who have left the market and now starting to come back, and they think that they know a lot. But in actual fact, they have been missing from the market for a good period of time, and it's a good reminder, because they are going to start noticing that, oh my goodness, this particular token is doing 30%. Where was I? And they start FOMOing and buying up. But there are certain cryptocurrencies that have been around for quite some time, and they are priced at, say, less than $1, less than 50 cents, less than 20 cents. So it's very unique, because in crypto, there is no there's no one size fits all. There is no requirement for a particular cryptocurrency to launch at a certain price. That means if this particular cryptocurrency, say, raised, I'll give you an example. Say if you are someone who wants to list on Nasdaq, the minimal price that you're going to be able to IPO is $4. That means your share price cannot go below $4. But in crypto land, it seems that it doesn't matter. The initial old school crypto projects, they would launch at a higher price point and they have a lower token supply. But the younger, later versions tend to want to come out with a huge coin supply. We're talking about in the billions. And then in terms of price, right, they can be anywhere from less than 10 cents to even lower than 1 cent. Okay, because they obviously want to create that demand that I can buy a lot of this particular token. And of course the story is that there's going to be a great demand, you need a huge coin supply for liquidity and whatnot. But in actual fact, you want to make sure that there is an actual utility behind it. So the utility can be defined in a few ways. One, that means there's a genuine ecosystem that has been established that encourages people to hold the tokens. Second, there is an actual demand because you can actually use the token. That means I'm going to use it for buying something or getting a discount for something. The next thing, obviously, they may have a product, either a software solution or a hardware solution that creates a demand for that token to be utilized for that particular software or hardware. Okay, so it only falls in these few categories. So right now, if you are someone who is quite clueless, you're probably wondering, okay, so how do I get into the swing of things? So you want to ask yourself, are you looking at it from a trading standpoint or an investing standpoint? But it's very difficult because you can do both. Okay, and I always recommend people within our CG Protégé to look at it from an active standpoint. Whether you're investing or trading, you have to be always relatively active in your portfolio and looking at this space, because suddenly the market can just turn without you knowing, and then the next thing you know, your token is either going up but you're not looking at it on daily basis because you're an investor. And it can be a good thing, but it also can be a bad thing. Because if you're someone who just buys and holds and doesn't look at the price very often, or you're not in tune, that's why I recommend also no more than 5 cryptocurrencies, right? It's not a one all be all, but I think having less than 5 cryptocurrencies just helps you to be more aware. Because if you are having a watch list of 10, 20, 30 cryptocurrencies, right, you are going to look at it from, as a trader, you only are looking at volume, you're looking at price action. So that definitely traders are utilizing their skill sets of the various types of indicators that they would like to use, and they're going to narrow it down from the list that they have. But as an investor, okay, you're looking for the 100x, 200x. As a trader, it's very hard to look at 100x, 200x because you are going to exit the position when you have hit your take profit or you have hit your stop loss. It's very straightforward. There's no trader that can safely say that they're gonna hang around and stick around for 100x, because they would have already set their sell order at a certain price, because in their head they know that, okay, this particular crypto is performing at a certain range, it has a certain volume, it has a certain volatility. It's all about probability. You're not going to think of 100x when the cryptocurrency has never even seen 100x in terms of range. So let me give you an example. So right now, let's say you're in Tether. Okay, so let's assume prior to this market movement, okay? Prior to this market movement here. This was since December of 2018. Right now, okay, let's say before the big move was 4th of February. So from the fact that it was in December until February, you have this range, okay, which looks like 40%, but let's really squeeze it down, because you want to have as many candle touches as possible. So what is candle touches? Very simple. You see where the wicks are. You see the wicks, or where the candle decides to open and close, that's your range. So in the past, it was about 16%, which is still very healthy. That means if you were able to queue, let's say you queue, and then after that you decided to, okay, you want to take profit, you can look at this range. So this was the range. But however, as a trader, you would be able to capitalize for a good 2 months before this happened, right? So this would be more of, you would have already exited your position anywhere from here or even here if you're already lucky, but you wouldn't have you would not have held the token because you don't have an investor mindset. You're not here to stay for the long term. So in this case, where would your next entry be? Obviously here. So you're gonna be looking at trading, right, the cryptocurrency here. Okay, so you're gonna be trading your cryptocurrency here, and this is the next range and the next opportunity that you would see yourself entering. So it's quite straightforward, all right? So from there, you would observe what is the price action. As you can see from here, initially the volume wasn't fantastic, but it started to get definitely more attractive at this point of time. So as you can see, the volume definitely increased and it allows you to actually put in more money. But if you notice right now, there doesn't seem to be much. You can't really say you want to put in $2,000, $10,000. It's easy to fill. In fact, if you try, let's say if you tried with $2,000, you will notice that it takes some time to even fill up this order because there's just not enough. If you look at the volume, the buy and the sell, you notice that, yeah, you can't even fill up. Let's just say this is the largest order, which is 120,000 at the moment. So 120,000 times 0.1385, okay? So that's pretty decent. That's a $16,000 order, pretty decent, but it's queuing there. And on the sell side, there is on the sell side there is a $38,250 order, which is decent, right? So if let's say I was wanting to cash out right now, I could, right? I could, because there seems to be I only can probably cash out here because there's no demand. So right now, even if I want to cash out, I have 18,000 tether. Okay, I have 18,000 tether. That works out to about $2,000 or something like that. Okay, if I want to cash out, I obviously can look for the orders that are here and I can decide to cash out, right? But if I want to wait for it, that means I anticipate that there will be further upside potential and volume. Why do I feel that way? Okay, so then it comes down to the fundamentals. Tether recently launched their mainnet. Okay, so they're not launched their mainnet. They're going to launch their mainnet, and they are already adopted on Sliver TV. So because of that, right, there's a little bit of hype. At the same time, there seems to be a little bit of a connection between Engine, ICX, and Tether. Okay, because it's kind of like there is a fundamental influence where these are so-called related to gaming, and gaming is pretty big in Korea. This is what we kind of analyzed, and we feel that there is still going to be some upside potential, even though it looks pretty parabolic. So right now, what we are looking at is just we're looking for a level of sustainability. That means it will kind of retrace. We're looking for a retracement and then see where is the range right now, because this is a one-day candle, right? So when looking at the one-day candle, we're looking for the fact that if this kind of holds and this 12 cents level holds, that means it's the new range. At the same time, if you notice the candle body is much larger. When the candle body is much larger, that just goes to show there's larger price movement, more volatility, and obviously there must be volume to support this large candle, because when order books were thin, there was not much action, right? When order books are thin, although the candle can look very long, but there's not enough orders to sustain. So you're actually seeing people able to buy to a certain price just to make it look like as if there's a lot of percentage gain, but at the end of the day, there was not enough for you to fulfill your order. So that is something that you should take note of as someone who is or as someone who is a small cap trader. You have to take note of all this. And if you don't, what's going to happen is that it's going to be quite detrimental for you, because you're going to get stuck. Okay, and getting stuck is not fun, right? So that's why, in fact, I actually changed my strategy from looking at that. At the time when the market cap was above 300 billion, it was very easy to fill up orders 10K and above. Right now, it seems to be more difficult to fulfill. Right now, it's a little bit more difficult to fulfill these orders. So I've actually reduced my trading amounts, right, to $1,000 to about $2,000, and that's just about it, because I don't want to get stuck, right? As you can see, I can just give you an example right here. This is a $2,000 amount, and if I wanted to sell, I can't fulfill the whole order. Simple as that, right? But if I go back to BTC, right? BTC, at least, okay, there's demand for 1 BTC to about 5 BTC, depending on what people want to do. That's still decent. But like I said, the good thing about being in crypto, right? You can start with very little. And in fact, it's encouraged that you start with very little, because right now, there's the fact that you have to look at the Satoshi level, and there's the fact that you have to deal with the US dollar tether. Where do I do my PNL, right? So all these things are going to be things that you have to consider. So if I'm looking at for the fact that this is something that we suggest to all our CG Protégé group, right? This is non-financial advice, but we always look for them to start off with the top 5 cryptocurrencies or top 10 cryptocurrencies in terms of volume to keep it easy for yourself, right? Because the top 5, top 10 usually have a US dollar tether pairing. Once you become more familiar and you understand how the mechanics behind cryptocurrencies work or how to trade altcoins, right? That's when you are able to kind of decipher 8 decimal places, because your brain is not used to looking at 8 decimal places. Trust me when I say this. I've had members and clients key in their order wrongly, okay, because they are not familiar, because we are very used to 2 decimal places. If you trade forex, you are used to 4, but when you trade crypto, it becomes 8. So you're suddenly having to manage, you know, the difference in the way the price is displayed. Okay, and here you're thinking, okay, I started out with $10,000, I'm going to buy $200 worth. Okay, seems pretty simple. Then another problem, when you use an exchange, right, it doesn't show the orders in total. Okay, what I mean is that when you look at your order transaction, right, it will execute based on a number of times. That means, let's say you intended to buy $1,000 of Bitcoin, but it couldn't fill up, right? Because there were not enough units. Okay, there was not enough units. End up, they are going to try to match your order. That's what exchanges do. They try to match your order, and after that, you will notice when you look at your order log, okay, it's very messy. From there, you have to export from the Excel spreadsheet and then make sure that you already had the formula already done up on another Excel spreadsheet, which is very complex. So what we are doing right now is that we are recommending looking at using certain tools or interfaces that help us to manage and kind of make it easier for you, okay, where you can do where you can tally the orders, you know how much was spent, what was the fees that were incurred. After that, there's also the buy sell order where you want to take profit and stop loss. Everything is set within that particular tool. So all these things, right, are going to be recommended in our CG Protégé. We are looking at a system that is easy to use and very, very straightforward for everybody. So right now, if you're deciding on which aspect to trade and invest, I hope that this episode kind of helped you out, give you a little bit of insights, and fundamentals do play a part. Because if you're someone who's very new, I will always suggest that you better stick to the top 10 cryptocurrencies, because that part you kind of cannot go wrong, because they won't suddenly just disappear out of thin air. Okay, they've been around the longest. But does it guarantee that you won't make losses? When you come and trade cryptocurrencies, just bear in mind that you will always lose money. Okay, whatever people say they've never lost money or whatever, it's all bullshit. Okay, whenever you trade, you expect that there will be a certain amount of losses that you have to sustain. Every trader, right, has wins or losses. It's just a matter of that ratio of how you manage the wins, and do you add on to certain especially when you are in a winning trade, or do you decide to take profit completely, or do you decide to manage and run a certain portion and let the rest run? What do you do? What's the strategy? So all these things, right, in our free course, we actually cover that. Okay, in our free course and our advanced course, we cover all that. It's in Udemy, so it's actually very easy to find. Just click in the links in the description below. From there, you can go and learn. Right? I think it's always best that you start learning from somewhere first. I think YouTube has a lot of people that are already teaching that, but it's all about being comprehensive and how much time do you have to spend when you are learning. So all these aspects you have to take note of, and this is kind of like a very fast, quick crash course on whether you should trade small cap or large cap. I hope that you enjoyed this episode. Take note, like I said, trading always carries a certain amount of risk, and there could be a potential that if you do not know how to manage that risk, you could lose all the coins in your account. This is non-financial advice, and if you felt that this episode was of value, don't forget to give it a thumbs up and share this episode if you feel that there are other beginner traders or novice, or at least basically traders that have been out of the market for some time. You feel that this could be a good reminder for them. Share this video and subscribe to the channel and click on the notification bell. We'll see you in the next episode, guys.